Hey, what's up everyone? Welcome back. In today's update video here for JASMY, we're going to take a look at our 3 time frames. We've got the weekly, daily, and the 4 hours. On the weekly chart itself, I'm going to take a look at some of our candlestick patterns because something's formulating that may be quite interesting going into next week. So let's get right to it. Heading on to the weekly time frame here, we can see that JASMY is trading at 0.02978, just below our 78 or 38% of our Fibonacci level. Now we can essentially see this bottom candlestick here. This could be a potential hammer candlestick. Ideally, we do want the wick at least twice the size of the body, which does fit the characteristics right now and observed at the very bottom. So this candlestick here, a hammer candlestick observed at the very bottom, is a potential reverse, a reversal candlestick on the bullish side. What does need to happen is in going into next week candlestick close, we do need a strong bullish candlestick, ideally coming up to the middle section of this red candlestick here. So essentially those two combined is going to give us a strong rally, hopefully back up to the 50%. Taking a look at some of our indicators here, we are losing momentum in terms of our MACD indicator. Again, it's starting to lose that bullish momentum, suggesting the sellers are stepping in here, and we've already seen it in the last 2 weeks. The RSI is showing us some neutral momentum sitting around 47%. Ideally, if we do want to see a bullish recovery, we want to come up to the high 50s to the high 60s here to have that bullish recovery. But targets that we are seeing on the weekly time frame here, resistance is immediately going to rely on the 38% of 0.0322, looking out for next week, possible coming up to this red candlestick, depending if we are seeing any bullish indicators. And then of course, coming down to an area of support, we have the 20 moving average, roughly around 0.0293. If we do see a weekly close below this candle or this below the moving average, potential drop may come down to the next Fibonacci level at 23% at 0.02581. So there is this possibility of this hammer candlestick that will play out. We do need to see some convictions in terms of the bulls for going into next week to see if we can hit that high 3. Going into the daily time frame here, again, we saw that continuation of the consolidation. However, we're seeing that the price is breaking below our key area of support, getting smaller in these candlestick bodies. So it's not as drastic of a sell. If we do take a look at some of our indicators here, we have the Bollinger Bands. We can almost anticipate that the price itself is going to fall below and get closer to this oversold category at the below our Bollinger Band at the lower level here around 0.024. So that's going to be the immediate support area if we do see a drastic fall. We do see momentum kind of slowing down in terms of our MACD indicator. We see these histograms getting lighter and smaller in size. So we may see a bullish rally come up into this consolidation zone. Resistance immediately relies around 0.033. We also see a bearish kind of indicator here with our moving averages, potential death cross where we see a smaller moving average come below our larger moving average. In this case, I'm using the 50 moving average. And when we do see that initial cross, the overall trend is going to remain bearish as well. Again, taking a look at some oversold territories here, we do potentially see the RSI coming down to that 30%. But bear in mind as well, we do need the price itself to come into a known area of support before we see a quick recovery. Areas of key areas here to watch on the daily time frame, I've already said it, the resistance here at 0.033. If we're able to close above this, convictions of the bulls in strong bullish candlesticks, we may come up to our next Fibonacci level at 0.037. If we do fail to rally to hit up this area of consolidation zone, we may come down to the bottom of our Bollinger Band around 0.0247. Going into the immediate support here, or immediate time frame of 4 hours, we kind of can see that extension of the consolidation zone, the break apart, and again, kind of like the tug of war in terms of the bulls and the bears. This 4-hour time frame here, just be very cautious. We are seeing almost an engulfing candlestick. The red body itself is engulfing the activity from this green body, especially from this pull. But not only that, though, it is near a 20 moving average, which again, moving averages are known as areas of resistance. So the price may come down to the 78% around 0.029 area as an area of support. Again, we have had some of our candlesticks kind of reacting around this area before either a break below to the next Fibonacci level or a break above to the next one. So we do see some indicators here. I'm just going to go over them really quick. 45%, again, very neutral, angle downwards. We may see that cross below our signal line, which does show another bearish signal. And of course, our MACD indicator here, these histograms aren't as strong. So even though that pullback here happened at an area of support, the histograms itself, that momentum wasn't as drastic in order to push and close above the 20 moving average. So 4-hour time frame, our moving averages are immediate resistance. In order for us to rally towards an upside here, we do need to close above our 20 moving average, ideally around 0.03. We may rally up to 0.031, closer to the 50 moving average if we do see any bullish convictions here. In terms of the downside, targets to watch is the next 78% Fibonacci level at 0.02. Ideally, again, we may see that drop in price and we may see the RSI itself getting closer to our yellow signal line. But that's kind of what my wrap up here in terms of JASMY. I mean, there is lots of critical things to look at on all of the 3 time frames that we have seen here, and essentially keep an eye around the 0.029 area, the 78%. This here for me is a make it or break it for JASMY in the shorter time frame. If we're unable to hold here, then most likely we're going to come down to the 0.027. Also, it is on the outskirts of our Bollinger Band, so we're most likely going to hit that oversold. May see a slight pullback towards a recovery, but let me know what you guys think down below. Thanks so much for tuning in today, and I'll see you guys in the next video. Bye.